Dear ladies and gentlemen, hello everyone, and welcome to today's Investor Conference webinar for Šiaulių bankas. I am Simona Bačkienė, Account Manager at Nasdaq Vilnius, and I am pleased to introduce today's hosts, the Chief Executive Officer of Šiaulių bankas, Mr. Vytautas Sinius, and the Head of Finance and Risk Management Division, Mr. Donatas Savickas. Firstly, the management of the company will comment Šiaulių bankas financial results for the year 2020 and guide us through the recent events in the bank. Right after the presentation, we will open the floor for questions. So let's begin. Mr. Vytautas Sinius, the floor is yours.
Dear investors, shareholders, analysts, colleagues, good day to everyone. Thank you for your time and interest to Šiaulių bankas. So we'll be glad to share our insights and views on the recent development of Šiaulių bankas and the market. So yesterday, myself together with Donatas Savickas, CFO, will give a presentation on the Šiaulių bankas development, and we'll be happy to, as traditionally, answer your question afterwards. So starting with slide number 3, as you can see it in your screens, just a summary of the year. So it was really least probably predicted year in the recent period. It was difficult from the beginning. It seemed that development will not be easy, but it was impacted strongly by the COVID. Everybody aware and know the development around the world, and Šiaulių bankas as well has been impacted by this pandemic. Therefore, we need to also update our forecast several times during the year, and it was fluctuating between 50 to 25 million euros, and as you can see, the final result of the year is slightly above our latest expectation, our latest forecast, and stands at the level of 43 million euros. Naturally, that's a slightly lower figure than 2019. However, the good thing that our decline is, compared to the peers in the market, I would say the smallest, and that's a good thing that the decrease was not that substantial as it could be looking retrospectively. So the major impact that influenced the difference in result is mainly comes from also things related with pandemic, but also not. So some of them, like increase in profit tax in Lithuania from 2020, gave additional close to 2 million additional tax expenses for Šiaulių bankas compared to the previous years, as well as slightly bigger provisions and impact of one-offs coming from sale of assets and the recognition of financial assets. So those impacts were key for the difference between the profit of 2019 and 2020, and the operating result was the difference was only 5%. Despite the COVID, I would say the bank balance sheet has grown substantially, so 21%, and reached the symbolic level of 3 billion euros. So bank is ready to accept new risks and to grow further from its balance sheet. And we expect that in the future we can use this opportunity of our balance to generate additional profits. Another important milestone in Šiaulių bankas history is direct supervision by ECB. So that's a new regulator for us. And 2020 year was exceptional, not only due to pandemic, but also specifically for Šiaulių bankas, our new interaction with new regulator, including comprehensive assessment exercise as well. First SREP that has been done by ECB supervision team. So all those challenges also were on our shoulders during last year, and it seems that we successfully passed those tests, and we can move forwards already knowing much better how work is going with the European Central Bank. Of course, we are still new bank in this supervision. However, the last year, as I said, was rather with a good and positive experience going off this interaction with the regulator. Yeah, the COVID situation, I would say, was rather well managed within the bank. Not only, being actively exposed to the retail network, having income that is generating through the retail network only, also the credit situation. So all those elements that somehow were impacted by the COVID, they were not on extreme, and I would say compared to the other industries that were affected much more than the bank. So we could be happy that the impact is not that huge compared to the other businesses in Lithuania and worldwide. So KPIs you also could see in the screen, and again I would say that they stand on rather strong levels, with a return on equity 12.7, with cost of income 42.7, capital adequacy ratio including interim profit at close to 21%, and cost of risk of 0.6. So summing up, I would say it could be worse, but the year finished, I would say, rather successfully, knowing the context and impacts that came mainly from COVID. So if we go further a bit on a macro and COVID situation update, so there was a very tough times, especially with the COVID. Quite clear two waves in Lithuania, and especially the second one was much harder and bigger than the first one. The only good thing that there was some experience already out of the first wave in spring, but the figures grew substantially in Lithuania in the end of last year. But again, good thing that we seems that we passed the peak, and now the figures going down, and we are now relatively look okay among other countries, and seeing the general trend of vaccination and new cases in a country. Now I would say we see a rather good development, and hopefully it will finish with this wave that is passing by, and step by step we will return to more normal lives. Talking about macro, just a very short view on that. The GDP development in Lithuania is really strong, and we can be happy and proud of such a small decline in GDP in 2020 compared to other countries. So 0.8% decline compared with the EU of 6%, and Eurozone is even close to 7%, and also neighborhood countries with more substantial decline. Shows that Lithuania was pretty resilient towards that type of shock. And looking forwards, again, we see positive growth, and counting those 2 years, 2020 2021, hopefully we could be on a winning side compared to the other countries talking about GDP development. Related to that, inflation rates remained positive in Lithuania, and showing good development of a country's economy, and also the projection of 1.7% in 2021 is also rather close to the EU average of 1.5%. Coming back to the COVID, so we've having the largest network in a country, we felt some impact on the client behavior during this period, and that's natural because there was a numerous of limitation of people to move, in the country. So therefore, we also reacted in the last wave. We reduced our number of branches. However, we kept a rather high number of branches open in order for our clients to be able to get the needed services not only online but in a physical places. So our closeness to the client was even at those times where it was really tough due to a situation with pandemic. So we can move further to the development of our key business driver, is the loan portfolio. So the year was, I would say, rather different compared to the previous 3-4 years when we showed double-digit growth of a portfolio. So the last year was different, and the growth rate was rather small, so it was 5.3%. The good thing that the yield stayed and still on a rather high level of close to 4.4%. And yeah, we can mention different type of developments in different lending products. So the most growth we got from mortgage development, so it was close to 200% growth compared year-on-year basis, and that also includes acquisition from Danske Bank. Corporate financing line has declined, and it was 9% decline year-on-year. Consumer financing, I would say, stayed flat, and the other loans also close to flat level. So summing up, mainly we can say that the mortgage portfolio generated the strongest growth, and others either decline or stayed on the same level. The good thing of the fourth quarter, we've seen rather significant comeback of demand and of bouncing from the previous few quarters, that were especially the second one, which was suppressed strongly by the first hit of COVID. And in the fourth quarter, we have a record growth of new agreements, close to 260 million euros, and in the last few years, that was the largest growth. Naturally, amortization during 2020 was also high. So a number of clients were, just amortizing their loans. Some of them that were, positively impacted by COVID, they even repay faster their loans or cover their credit lines, and that also influenced negative growth of corporate financing. So despite that, difficult development, I would say, in loan market, Šiaulių bankas has been able to increase its market share in all positions. And of course, the most substantial change came in the mortgage lending that I've touched already, and there will be some more information later. So on a corporate financing side, you also on a graph can see the development of constant growth each quarter in the 2019, and then the same decline during the last year. However, as I mentioned, the decline in the country and in other players were more substantial, and Šiaulių bankas, even with such a development, has been able to increase its market share by 0.4 percentage point to 13%. So our current market share is already 13% in corporate financing portfolio. Probably worth mentioning a few words about the COVID impact to the loan portfolio. In Lithuania, we have moratoria that has been applied as also in other countries in Europe for the clients, both private and individual. It is private moratoria that the banks agreed to apply this type of common restructuring rules for corporate and private clients, and this moratoria is until the end of this month. So the good thing of that we helped many clients to come through this difficult period, and that pays off successful, I would say, both for the bank, knowing the key rules and having some general approach in the country how to restructure loans. On the other hand, client could help much more, clear situation how to pass this period. And the figures shows that most of those clients came back to the normal repayment schedules, and only 8% of the clients needed some additional restructuring after the first one. So from 203 million, 161 already returned to the normal development of a loan repayment, and only 8% needed some extra tools that are needed for them to continue moving on with the still big impact from COVID. Diversification element remains, I would say, rather strong, and it continues to be more and more diversified. I'm talking about portfolio. So it is diversified both on the corporate lending side and including growing part of private individual loans, mainly mortgages. We continue to have better and better diversified portfolio and less dependent from one or other economical sector in Lithuania. So touching a bit more on mortgages and consumer financing. So you see development of loan portfolios. So definitely, I think two streams generated growth in mortgages. So both natural organic growth and acquisition of Danske Bank portfolio at the first half of the year. So this moved us from rather, very small figures, and in 1.5 years we reached more than 3% market share, and that's already, I would say, rather visible market share in the market, and we're becoming with each month more and more visible player in this field. And the fourth quarter was, I would say, again, very successful for Šiaulių bankas in new mortgage generation. So that was a record month with close to 36 million euros new agreement signed. signed. So overall, 2020, despite the difficulties in general economy, the mortgage market was booming. So we are part of that growth, and so far, the growth still exists, and even the first quarter shows also good development. Consumer financing was much more influenced by the COVID in 2020, and both, I would say, the increasing competition and the lack of demand influence the development of portfolio and also the pricing. So as you can see, there's some pressure on the interest rates, and the good thing from our side was that our diversified sales channels paid off, and we managed to use fully the opportunity of e-commerce and products that are financed through our consumer financing solutions at e-commerce. And again, our market share during this tough year for consumer financing business has grown again close to 1 percentage point, up to 12.2%. So I would say it's a good achievement of growing market share even in the difficult times. So let's see. I hope that with the clear situation with the COVID and less uncertainty in the consumer behavior, the use of consumer financing products will come back. But of course, that's very competitive market, and there will always be the pressure both from the competitors and the restrictions that are also applied to this financing to generate future growth of portfolio. So I would give the floor to Donatas to join for the next slide. We'll come back later then.
Thank you, Vytautas. Good afternoon, ladies and gentlemen. It's good to have the chance to present results of Šiaulių bankas together with Vytautas. So I will comment starting from loan portfolio quality. And on this slide, probably when we look at the graphs, the first thing that draw our attention is the increase in NPE loans. During the last quarter of 2020, it increased up to 6.9%. And main reason for that, we had two main reasons. One was we reviewed in the fourth quarter our loan portfolio, and all loans that were assigned to the second stage when the pandemic began. So it was evaluated separately, case by case, each exposure, and it was split either to first stage or to the third stage. And the second factor is recommendations from regulator that we received during comprehensive assessment process. So that resulted increase in NPE, but however, it didn't translate it into a significant increase in provisions. The main reason for that is that these loans, even if they were assigned to the third stage, so they do not show any problems with the payments past due or any other weakness signals. The main reason for that was that their financial status was, how to say, evaluated very conservatively, and this is why they moved to NPE status. So As I mentioned, the comprehensive assessment or AQR process already impacted our results for 2020. And despite that, final results will be published in the mid-April, we expect. However, the main impact is already put into our financial statements for the previous year. What else was to mention? That IFRS 9 requirements stipulates that all provisions should be created in advance, anticipating changes in macro situation. And out of 10.5 million euros provisions that were made during last year, so 40% were caused by changes in macro parameters. Meaning expected GDP development, unemployment, and other parameters. So if will, develops in better directions, that may mean that these provisions could be released. And if situation will be bad or will remain not good as we expect, so these provisions could be the basis for transferring into weakest exposures and make provisions for the customers who face the problems and will be difficult for them to repay their loans. Yeah, we can probably move to the next slide. And I will comment about daily banking. So this is the daily banking business's main generator of our commission income. And despite that the turnover of customers in our physical branches decreases, but it didn't affect very severely our commission income. You can see that we maintain similar level of commission income, net fee and commission income like in the third quarter when the quarantine was released. And of course, in third quarter, it was one-off impact from the bonuses we received from MasterCard. But except of that, so we remain at the same level as earlier. During this tough time, 2020, we managed to increase the number of our customers, and right now we have a total number of customers more than 170,000 private and business customers. Also, they use all kind of services that are available here in Lithuania. So payment cards, digital channels, mobile app that we introduced new version recently. The results of usage and how many new customers we managed to attract, that makes us feel quite positive and for the future. Graph on the right bottom side of this slide represents main source of fee and commission income, and you can see the first two segments, payment services and cash operations, represent that the importance of our physical branch network that we are maintaining throughout the country, almost 60 branches. So in the meantime, when other banks moved very rapidly out of the cash operations, we see that there is still demand for cash operations from our customers, and we think that we still be able to generate significant source of income from these operations in the nearest several years. But at the meantime, we're also investing in our alternative digital channels, and also we see increase in that segment in the form of increasing of account administration that provides stable source of income, and also administration of loans from third parties that mainly is our renovation business. It's also sustainable and a significant income source for us. Yeah, probably we can move on about several words about treasury operations that mainly revenue from foreign exchange. Again, it's stable and significant source of income. And of course, the lockdown affected it as the tourism business, or to say, number of customers, number of tourists visiting Lithuania decreased, and that affected also income from foreign exchange. Talking about securities, so it more or less reflect the changes in the market, and also our activities when we realize profit from portfolio. So in the last quarter, we didn't act very actively taking profit from our securities held to maturity. Therefore, it result was not big. Funding. So it's funding. Even we do not make any active operations or steps. So like in all sector, funding increases, and mainly increases in demand deposit. In term deposit, we saw a slight decrease, but we made active steps decreasing our interest rate that we are offering for long-term deposits. But that make us our funding cost cheaper, but we don't feel any pressure, and our liquidity profile remains very solid and strong. Good news that came out recently that Moody's changed the outlook for Šiaulių bankas to positive, and our current rating is Baa2. And that means that we are in the safe range above the investment grade rating. And in the future, if the need arises to attract new funding, that we see many alternatives, and additional alternatives that also came out as a news from us. We recently established relations with 4 new European countries that we will be able to attract funding from the Austria, Netherlands, France, and Spain. And we tested this source of funding earlier in Germany, and it proves to be very responsive to the rates. And we see not as a main source of funding for the future, but as a good alternative for that. Yeah, and probably on this next slide, I will pass word back to Vytautas, and later we'll be happy to answer questions if any. Vytautas?
Yes, thank you, Donatas. Let's come back to the next slide to capital and dividends. So I would say it's symbolic that today we made an announcement regarding draft resolution for the shareholders meeting at the end of this month, including the profit distribution. So situation with the capital, I would say it's strong. We have a strong capital base that has grown during several years. And as you can see, the capital adequacy ratio, including the profit of 2020, is 20.6%, and we have a substantial reserve of close to 100 million euros to our internal risk appetite of 15.5%. And if we compare with the minimum requirement that currently in place, so we have almost double reserve in this amount. Of course, this minimum requirement shortly probably come back to the previous level, and we expect that it will come back after return of some buffers up to 12.6. But again, we are maintaining a larger capital base compared to the optimum level, I would say. That would be natural to pay out in dividends or to use in a growth. However, the situation maybe not that usual when the central bank gives strong recommendations regarding dividends. So last year it was even more tougher. This year there is some release. However, counting as a maximum that we can propose to pay for the previous years, it stands at the level of 3.3 million euros. And in the slide you can see comparison of several parameters that are presented in the ECB recommendations. So one is related with the limit of accumulated profits during 2019 and 2020. And other one is related with CET1 ratio of 20 basis points. And that's parameters that's in absolute term at 3.3 million euros level. So probably the bank would be in a position to pay high dividends, but most likely we need to wait until the situation calms down, and both the bank and central bank would also be confident that the situation is resolved with pandemic and banks could use the capital more freely. So until the 31st of September 2021, this recommendation is in place. So our dividend payment period is coming to the EGM, and we most likely will not be able to come back to this question this year, and we will come back then to the next question. However, buybacks possibility, if nothing changes, would be open starting from the 31st of September 2021. So definitely we are committed to our dividend policy, and we stick to that. Just to remind that we intend to pay not less than 25% of earned annual group profits as a dividends. However, those few years with the COVID impact, we're not in a position to apply directly this policy, and only partially we can propose payment of dividends in this forthcoming general shareholders meeting. But anyway, this accumulated reserve is still in the bank, and it could be used the best way, both considering the growth of our portfolios, as well as the accumulated amount for the future dividend distribution. Okay, so we can move a bit to touch Strategy update. So I would say there's no revolutionary things in our business model. We fine-tune our position in the country. So I would say the key points that we are strongly focused as a local bank to the Lithuanian market, better and better covering different business segments and growing there. We are committed to the main driving force of our organic growth. Nevertheless, we also showed track records of capabilities to make different type of acquisitions, and the last one was in 2020 with the mortgage portfolio. So if we would see opportunities, so it's obvious that our capital base and liquidity position allows to grow not only organically but through the acquisitions as well. So with our strategic statement, we want to emphasize that we are historically strong in financing solutions, and we expand in this field and demonstrate good results in most of key segments of financing, including corporate financing, consumer financing, mortgages, and renovation. That is also specific to Šiaulių bankas. So those 4 areas generate most of the bank's income, and as I mentioned, that we are in a position to even in those areas to find more potential. As example, in corporate financing with a larger capital, we can attract new clients, the larger exposures with more competitive interest rates. Therefore, we could enter the larger tickets financing. The same with the mortgages, that our current funding and capital base allows to be very competitive with other players in the market to propose rates for and conditions for our clients. And it seems that in the recent past, we've demonstrated solid growth in such areas as well. Talking about our branding positioning, we committed, as I mentioned, to Lithuania, and that's our uniqueness, that we are focused on one country and treat ourselves as knowing the best clients, being closer to them through our mental understanding of different type of customer segments, having the widest branch network, historically showing the best of one of the best client service and customer experience, and especially our long-term commitment to the SME segment and knowledge of using different guarantee schemes and specific products for corporate medium-sized companies. And probably a few words about the priority directions that we highlighted in our forthcoming business development. So strong focus on digital sales channels, so including mobile application upgrade that has recently came to the clients, and further development of it, and also internet bank upgrade, which is also ongoing, and the new versions will continue to cover more and more client-friendly applications. But along to the digital channels, we will maximize our branch network efficiency. So we will use as much as possible out of our branch network to get new clients, to provide those services that are still in the need for clients in the physical places. So this omni-channel mix, I would say we have probably one of the best in the market, talking about the client needs and accessibility to banking services. Another area of our development is better utilization of our client base throughout our group, so including our subsidiaries. So further development of products that could be linked together and cross-sell to the clients, still not utilized 100%. So we will streamline our work to extract even more value from our group perspective. And further strengthening of our financing products. We see the competition. We find also the old players and the newcomers, working in this direction. So we committed to the leadership in financing products, and will further on develop both renovation, corporate financing propositions for the client that will be in line with the needs of them. And the last but not least topic, important both for internal and externally for the bank, implementation of the highest standards of governance and risk management. So this topic is critical for bank to withstand for different risks and related with compliance and numerous of different risks. So that's important for the bank to be managed. So working together with ECB, with new auditors, KPMG, that audited first time our results after PwC for many years. So we see that we are on the right path, further developing bank and being among 100 top banks in Europe with the top level of governance and risk management within the group. And a few words about key performance indicators and our indicators that we are willing to achieve during this year. So our return on equity, I would say still it's hard to predict 2021. Hopefully it's a bit easier here than 2020. So we have some, in this return on equity above 12% reserve, that if the year will be rather bright and we all come back to the more normal way of doing business as usual, then there are some negative effects continuing. We would need to make some provision. Therefore, the expectation of return on equity is not as high as we historically were mentioning, close to 15%. But if situation develops right, I would assume that this level of return on equity could be reached. Of course, another element, the capital which is accumulated now could also will also impact the return on equity ratio. Cost of income, as we mentioned several times, we are keeping below 45%, so that is in our plans. Capital adequacy ratio definitely would be above 15.5%, and cost of risk, we, as I mentioned, we put it in our expectations some reserves, and they expected to stay at the same level as in 2020, so at the 0.6%. So let's see how those portfolios develop. So far, I would say the situation is pretty good, but story with pandemic, it is not yet over. And few other indicators worth mentioning. As we performed in 2020, we are committed to grow our market share further, both in all key segments like corporate financing, consumer financing, and mortgages. And I would say we're already rather strong position in the corporate and consumer financing. And as already mentioned during the presentation, we see good opportunity in the current period to grow our market share in mortgages as well. And the last slide before questions is our stock development and some data that probably would be useful to see some dynamics. So as I already mentioned several times, one thing is very important is for listed companies the liquidity. So the liquidity of Šiaulių bankas stock is growing constantly, and the last year was, I would say, a very good example of accumulated development of growth, and more new shareholders join and invest Šiaulių bankas, and that gives additional fuel for new to come, and further on to increase interest in the stock. So just summarizing, I would say the current standing situation with our historical return on equity, with our efficiency through the cost-income ratio, with the capital base and liquidity in the balance sheet, as well as our loan-to-deposit ratio, which declined now back to 75%, I would say is a good moment further to grow for Šiaulių bankas after 2020, which was not that typical compared to the previous year. We were showed double digits growth. This last year was as an exception on this growth path, but our current key indicator shows that the bank could compete and show good development in this year and the next year, if situation would allow us to use this opportunity. So I would stop at presenting Šiaulių bankas now, and we'll wait for your questions, and myself and Donatas will be happy to answer them. Thank you.
Mr. Sinius, Mr. Savickas, thank you very much for your presentation. Now I will proceed with the questions that were received in advance. The first is the following. Could you support me with some reasons in order to invest in Šiaulių bankas?
I will take this question. So, in my view, that all presentation and the statements we both made, provides this basis for investment. But I will try to highlight and put it in several statements, bullet points, in order to be more visible in how I see that. So any investor before deciding to invest should follow to look track record of particular company, and track record of Šiaulių bankas profitability and ratios proves that our consistent profitability in terms of return on equity in the range from 10 to 15%, and also very efficient cost-income management proves that we have sustainable business model. And the initiatives that we are taking right now makes us believe that we have good perspectives to continue. When one kind of business decreases, we are ready to explore new alternatives, such as, for example, in the last few years, renovation appears as a new source of our stable source income. Another factor is that probably the fact that we mention our supervision by European Central Bank. From the one hand, we have additional workload and demand from regulator because the level is quite significant compared to the previous one. But at the same time, it's like a quality mark, and the exercise that we are finishing, that this comprehensive assessment analysis, also put additional, confirmation that there are no hidden secrets in the bank, and that creates comfort for potential investor, in my view. And the opportunity to invest is good right now, because the share is currently undervalued, having ratio of price to book at 0.8, and having the increasing liquidity that is very important, especially for international investors. So makes us to believe that it's becoming very, attractive opportunity to invest. And the moment is good when the price is low, as it is compared relatively right now. Yeah, that would be short answer from my side.
Thank you very much. Next question. Did government aid measures to business impact the bank's lending volumes in Q4? Will that effect dissipate in the short term?
Yes, the good question, and the impact was rather visible, not only talking only about fourth quarter, but the whole year of 2020. So I would say the government aid was, on the one hand, it was very needed and supported businesses to go on. On the other hand, it became as a new lending player in the market. So more than 1 billion euros has been granted through the different either loans or tax deferrals to the clients during last year. So on one hand, as I said, it was a good support for the clients as well, to the banks to keep clients' creditability high. On the other hand, some clients used as alternative for their needs to be financed not through the banks but through the government. That trend was more visible during the second and third quarter. However, I would say fourth quarter and the current period is not that much exposed to the new instruments. And also our development in the fourth quarter of 2020 shows that demand returned and new loans were granted on a higher level than the previous quarters. Therefore, I would say that during this year, definitely that support would be much smaller, and potentially, I would say even government could consider that part of the portfolio could be somehow refinanced by banking industry, because there's enough capital, there's not enough liquidity. So there is a possibilities that banks could be more active on using or providing the financing to the corporate clients instead of government. So yes, this effect will diminish, I would presume, this year, and the banks could finance more the clients than it was in 2020.
Thank you very much. Next question. Are there any restrictions from ECB to distribute profit to shareholders through granting additional stocks for shareholders? Bank used this model some years ago.
Yes, it was the practice of Šiaulių bankas some time ago to distribute shares. And I would say, in my understanding, there is no restrictions by ECB. Probably we could, have a more detailed discussions with them on that, whether there is any limitations on that. But in my understanding, there is not. However, in our view, we would, at this period of time, we would be willing to be more focused on our dividend policy that has been approved several years ago, and to focus more on the cash dividends. And yeah, that would be the answer, that let's wait when we'll be free to disburse cash dividends as it is possible, keeping a strong capital base, but not overcapitalized.
Thank you. Does Šiaulių bankas have a plan to expand or enter new markets? What is the growth forecast for the coming years?
So partially, I hope that I answered this question, giving some insights on strategy upgrade information. So just expanding a bit on this topic. So yeah, we are focused on Lithuania, and in the coming period, we see still much potential in the country, because still, as GDP shows, the economy is developing quite well, and we have resilience in such situations like COVID, and the new businesses appearing in Lithuania. Therefore, the country itself provides good opportunities for growth. As I also mentioned, I would see more growth in some larger tickets like mid-corps, when we can grow ourselves or participate in syndicated loans. So we already had some recent developments in that field. Our capital base allows to grow with the larger tickets as well. Of course, we will continue to look through the right diversification, and through the growth of mortgage portfolio, as well as consumer lending, renovation. I would hope that we will not lose that diversification, but could expand in the larger tickets. So we see easy opportunity to grow in Lithuania, not expanding to the other countries where would have different type of challenges. And since the potential is good here, we expect to grow further on in Lithuania.
Thank you. What is your definition of an active client? Earlier, you have indicated that the total number of clients is about 330,000. Now you mentioned that the number of active clients is just 172,000.
Okay, I will answer this. Happy that we have very, how to say, investor that observing every detail very carefully. So yes, you are right, noticing that the definition of previous figure and right now is different, because the nominal number of customers that we have is above 300,000. But definition active clients we use in order to indicate the customers who we have how to say transaction with. And active customer means customer who had a transaction with the bank and paid a certain fee in the last quarter. And this number doesn't need to be stable even if we do not attract new customers. So our task is to make customers, nominal customers, to be active, to offer them services that is good for them, and make them use them, and then probably they will be active not for 1 quarter, but they could become active for the next period as well.
Thank you for clarification. Next question, assuming ECB would remove the dividend limitations by next year, could we expect larger than regular dividend in 2022?
Yes, good question, and I've seen there's a few questions related to that, so I will answer now. There are chances that the dividends paid in 2022, they could be larger than our dividend policy says, and the reason is that we will talk about the period of 3 years, 2019 up to 2021, including this small dividend if it is approved by shareholders paid this year. So we will keep in mind this period. Of course, we will need to take into account the capital requirements that will be at that time. But as Donatas mentioned, we passed 2 important tests during the last year. So comprehensive assessment and also SREP with ECB approach. And that allows us to have some comfort in understanding the treatment of capital requirements, not only from Central Bank of Lithuania, but also from ECB. And the third element is the growth potential. So I would not take 2020 as a representative year of our capital need, because we've seen some detraction in one business line. And if we on a good growth this year and see projections in 2022 even better, then we would need to allocate capital to that as well. But summing up and seeing the buffers that we accumulated during the previous period, we could assume the dividends higher than minimum level of our dividend policy.
Thank you. In your view, why the corporate loan demand was so low in 2020, and what do you expect in terms of lending market developments in 2021?
I will take this. So it's how to say, an easy and difficult at the same time to answer about the low demand in 2020. So obvious reason is that everybody was affected by this pandemic situation, and cautious customers probably they stopped their thinking about new investments in the beginning. At the same time, banks were also cautious and also lifted probably the requirements for new lending, especially when the situation is not clear. Another factor that affected this demand, probably it was the government aid measures. So relief of requirements regarding payment of taxes, other relief measures, so created some kind of additional provision of new funding alternatives, and it became like how to say, alternative for the bank, and the demand for new lending decreases. Yes, and the third factor, not very important, but again, we mentioned several times during today's presentation that this comprehensive assessment process, it was kind of disruptive effect of everyday business, because at the certain moments, very big part of the bank employees were dedicated to provide necessary forms of information for ECB, and it naturally, how to say, focus their attention toward from customer-oriented view to the regulators' demands. That for the short period, how to say, made the negative effect for that. Talking about 2021, so we believe and we built our assumptions that the pandemic situation will be, how to say, improved. The situation will improve, and we'll get more or less to the normal format of business, and therefore we expect loan portfolio growth in the double-digit figures, meaning above 10%. And the business customers growth also in that range, but talking about the whole portfolio, this mortgage loans will be important, how to say, factor to reach that goal. Yes, that's all.
Okay, thank you. You are obviously overcapitalized today, having 98 million euro in capital reserve before reaching your own risk appetite. Hence, do you plan to pay out the excess reserves when the ECB recommendation will be lifted? And do you plan to lower your own capital ratio level closer to minimum requirement to offer shareholders more value and operate more efficiently? Otherwise, you would just distract value for current shareholders.
Yes, quite deliberate, expanded question about the dividends as well. So partly, hopefully, answered the view, but just to give some more thoughts on that. Definitely, we need to seek the balance between the needs from the shareholders and the requirements coming from the regulator. And since this period was new for us with ECB, so I would say it's a good coincidence that this capital base is not the question from the regulatory standpoint. Now we need to find the new optimum level in the future. What is the optimal level of capital for Šiaulių bankas? So definitely, I agree with the comment that current situation shows that the bank is overcapitalized. However, we all understand why ECB provides such guidelines in the market, that the banks should need to be cautious during this period, which is, as I mentioned, could be much worse. But talking about ECB recommendation, definitely, if it is lifted, we will come back to this question, and within next year we will consider the ECB position. If it's neutral, then we'll be much more free to act and to count from this optimal level of capital need. Could we review our internal risk appetite? Of course we can, but knowing the internal kitchen of capital calculation, there's a number of buffers that are implemented by the central bank, and it could change rather fast. During 1 year, it could move from 1 percentage points or even more. So we need to understand what the development is projected by the central bank or European Central Bank, how the macro situation develops, and to set the right level of our internal capital appetite. So that's the thing that we will continue to be focused on. If there is some room of reviewing this appetite, we will do that. But in the light of all the requirements that are now in place or will be in place.
Okay, thank you very much. We have already used up our time, and it seems that all questions are covered now. So on behalf of Nasdaq Vilnius, thank you everyone. It was a pleasure being with you today. Record of the presentation will be available in the Nasdaq Baltic YouTube channel webinar playlist, and as always, and on the website sb.lt. Mr. Vytautas Sinius and Mr. Donatas Savickas, thank you very much for your presentation and for answers given. Participants, thank you for engaging with us. Everyone, have a good evening.